Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khilkar.
And I'm Yatin Mota.
Well, the policy week has started on a steady note with the Nifty just a shade below that 19,600 mark. Even the Sensex managed to hit that 66,000 mark briefly in intraday trade. If you look at the mid and small cap indices, both of them were in fine fettle. In fact, it was the mid cap index that was outperforming today, gaining somewhere around 0.5% or thereabouts. Among the sectoral movers, pharma, that index was up and about 1.5%. You had auto that was doing well, you had IT doing well, even FMCG that was not doing very well managed to edge back into the green. What did not do very well was the banking and the Nifty Bank and the Nifty PSU banking index. Both these indices ended in the red, but barring this, you had semblance of green across the screen. Among some of the individual movers on the Nifty, you had the likes of M&M, that stock was up 4.5%. You had Divi's Lab, Sun Pharma, SBI Life, Hindalco, even Cipla, which was losing out in the first part of the session, managed to edge back into the green. On the losing end, you had the likes of Britannia, of course, after disappointing volume growth in the first quarter. You had SBI, brokerages have cut target price there, so that stock under pressure after earnings. Bajaj Auto, Tata Motors, Axis Bank among some of the other laggards on the Nifty. But Yatin, let's talk about the broader end of the markets. What was moving out there today?
So, if you look at the broader markets, there was strength in the markets, and let's talk about the new listing, Yatharth Hospitals, and obviously the expectations and the subscriptions were quite high, but the stock ended up 10% higher. So, versus the issue price of close to 300 rupees, the stock ended at 331 or thereabouts. Obviously, a lot of these fiber optic companies were also in focus. So we had the likes of HFCL, the PSUs like ITI were in focus, 10-12% gains coming in after the government of India announced anti-dumping duty on fiber optics, because of which all of these stocks were running in trade. Rustomjee, after a strong set of earnings, that stock moved 10% higher. IRFC, after the government of India announced 25,000 crores worth of railway station upgradations, and obviously IRFC is the agency which usually funds these infra projects, probably hence the stock was in focus. What was not doing well is ABFRL after the weak commentary as well as weak results. The stock fell 5%. Adani Green, after a large 4,100 crores block deal, fell by 5% in trade. Zomato, that stock touched the 100 rupee mark. Obviously, it saw some correction after that. But still the stock ended up 2.5% on the back of strong commentary from the management. REC, PFC were the top FNO gainers, both of these stocks gaining above 5-6% and clearly hitting fresh 52-week highs.
Right, those were all the movers and shakers from the mid-cap end of the markets. But let's take a look at some of the stocks that are on our radar this afternoon on that note. Starting with Paytm, Yatin, this stock was up somewhere around 10% when we started out in trade, but towards the end of the session we saw the stock ending somewhere around 7% higher or thereabouts. There was a trigger, obviously. Vijay Shekhar Sharma, in fact, looking to buy out 10.5% stake from AntFin, which is a subsidiary of Ant Financials. And this stake, with this stake buy, Vijay Shekhar Sharma will become the largest shareholder in the company. And in fact, his stake will rise to somewhere around 19.4% post the stake buy. And AntFin shareholding will come down to 13.5%. Now, this stake buy is valued at somewhere around $628 million. After that's obviously keeping in mind Friday's close price of somewhere around 797 rupees per share. Resilient Asset Management, which is a 100% entity owned by Vijay Shekhar Sharma, will be doing this transaction, and it will not be a cash transaction. There is no cash involved, so no Paytm karo as such. But NCDs will be, or optionally convertible debentures will be issued to AntFin, and but they will have the option of converting it into equity at a later stage. So this partial exit is not like AntFin making a profit out of it. It's just a transaction wherein NCDs will be issued to AntFin. Now, if you look at Paytm, the numbers are pretty healthy, and foreign brokerages are already pretty bullish on the stock, and target prices have been pegged in excess of 1,200 rupees or thereabouts. And with this stake buy, a key overhang of the largest pre-IPO investor selling or exiting, this risk gets out of the way. So this is the one big overhang which is out of the way, and that is something which is a big positive. In fact, Goldman Sachs believes that this firm, Paytm, is on track to be the most profitable India internet company starting FY25. But let's not forget that we will be seeing Jio Financial listing pretty soon, as was indicated by Reliance in the annual report. So we'll have to, that I think that is something that could emerge as a big risk for the players like Paytm, Bajaj Financial and thereabouts. So that's one big risk to watch out for. But aside of that, right now things looking good for Paytm.
Absolutely, and Paytm is one stock which has been doing quite well after hitting multi-year lows, and the IPO price was over 2,100 rupees, and now the shares at which the transaction is happening is much lower than that. Obviously, the show of confidence because the founders have been hiking stake, and hence we saw some uptick in the share price, nearly 7% up for the stock. But the stock in focus today was Mahindra & Mahindra. A lot of controversies regarding the stake purchase in RBL Bank, and post the results, the management really clarified as to how their capital allocation policy works. No further intentions to raise the stake in RBL Bank. But if you look at the brokerages, they have been quite gung-ho on the stock of Mahindra & Mahindra. Now, if you look at Goldman Sachs, they have a target of 1,730 rupees on the stock. JP Morgan has a target of 1,715 on the stock. So the targets of the brokerages have been revised upwards over 1,700 rupees. Goldman Sachs believes that the investment in RBL is something quite strategic. Probably it will help the company garner better transactional relationships with its unit Mahindra & Mahindra Financial Services. And also, if you look at the farm segment operating profit, which is the EBIT margin, it has been much better than the street expectations. On the other hand, JP Morgan believes that the first quarter earnings were much better than the street expectations, and the free cash flow in the auto business will be used for the auto business only. That is what the management really spoke about. Because when it comes to the farm equipment segment, the auto segment, there were fears that the investments in RBL Bank could lead to some slowdown in the investments in the auto business. But the management said that the three verticals, one of which is autos, one of which is services, the cash flow will remain in the business unit, which is probably something which the market appreciated. In fact, M&M continues to rope in external investors when it comes to the electric vehicle business, which is a positive according to brokerages. So, in general, the stock of M&M was in focus, one of the top gainers on the Nifty, gaining by nearly 4%, ending almost at the day's high.
Right, I think, and this clarification coming in from management boding pretty well for the stock, given the fact that this has been, the stake buy in RBL has been an overhang ever since the news came to the fore. But aside of that, the other stock on my list today is again from the new age basket, Zomato. Of course, Yatin was mentioning that the stock did hit that 100 rupee mark for the first time since Jan 25, 2022. It didn't really manage to close around at that level, but nevertheless 97 rupees is where the stock ended, hitting a fresh 52-week high in today's session. Now, of course, we saw that the numbers came out on in fact the stock reacted to numbers on Friday, and it did turn a net profit of 2 crores in the first quarter. That was 1 quarter ahead of expectations. And aside of that, operationally also it was pretty strong when it comes to the first quarter performance. Gross order value when it comes to food delivery business saw 11% jump on a quarter-on-quarter basis. Hyperpure B2B business doing extremely well. Even Blinkit, for that matter, aside of some issues in April, in June the business managed to do pretty well. And look at the management commentary. They have said that they expect Blinkit, in fact, to turn food delivery business could grow somewhere around 25 to 30% over the next 2 to 3 years. In fact, they have said that they could look at 40% top line growth on a YOY basis for the next, at least for the next couple of years. So that is something that has got the street excited. Even for Blinkit, I think they've said that they could look at breaking even in the next 4 quarters or thereabouts. So all these comments have got the street excited. A lot of these brokerages had 100 rupee, 110 rupee kind of target, and which has been of course, hit in today's session. But aside of that, given the fact that there's such a strong commentary coming in from the management, they're extremely confident, and not only net profit, not only the fact that they have handed in a net profit, even the fact that operationally all their other businesses like food delivery business, Hyper, Pure, Blinkit, all of them have started to do pretty well. So that gives street confidence that this is one business that could do very well going forward among the new age stocks. So that's one stock that was on my radar. Plus, if you look at the stock, it has done pretty well this year itself.
Absolutely, and Nandita, the stock of Zomato was much spoken about when it it was hitting new lows.
Yeah.
30-40 rupees, where the stock ended up after a big rally post the IPO, and now again with the results coming in, I think the street has got excited. 100 rupees on the stock today, clearly a show of strength as well as investor confidence that once things could improve. You get equally rewarded, and the focus on profitability is something that the street really appreciates when it comes to these new age businesses.
That's true. This is what they were looking for, and this is what they got from the management commentary as well. And of course, lots of earnings to watch out for tomorrow. You have the likes of Hindalco, Coal India on the Nifty, so we will be watching out for those. And this is a policy week, so of course our MPC meeting will start tomorrow, and the outcome will be declared on Thursday. So crucial week, and we have started off in a very positive note, given the fact that we have managed to reclaim that 19,600 mark, not shut shop above it, but still managed to shut shop near about that mark. So with that, I think we've come to the end of this edition of Closing Bell. If you have any comments, leave them in the comment section below. But of course, join us tomorrow morning at 8:30 a.m. when I get back with morning trade and send in all your stock related queries that we will be getting answered from our expert on the show. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching. For all your other news and updates, stay tuned to Money Control.